Hello traders and welcome to our market update. It's Stu Naupan here, founder of Master of Markets Trades Conference and the Traders Open Day. So yet another month, 3rd of April over here is what we have. And still we are in the COVID-19 situation in the UK. However, with every situation, there's always great opportunities. So let's keep our mind focused on where the market opportunities are at the moment. Today's topic I just wanted to talk about on the basis of, does history repeat itself? Does history repeat itself? Let's analyze that, right? History repeat itself, okay, is what we are looking at. So, based on this particular point, let's take a look at a few points. First of all, yes, on certain principles. Okay, so let's take a look at that. Certain principles are what, traders? You see, first of all, throughout the history of time, there's always two people always going to play the market, the buyers and the sellers. And when do you particularly buy a position? You particularly buy a position at here or here or here only on the basis of everyone, all the billions of buyers out there, if you think it's going to go higher, right? That's the only reason you buy anything. I mean, not only in the markets, anything in life, especially towards investments. A property is the same thing as well. If you think it's going to go higher, you would buy it to sell it later. Now, when would you sell something on the other hand? If you think it's not going to go any more higher. So at this point, if you think that it's not going to go any higher, all the sellers fold. All the buyers fold their hand, and then the sellers also start to think, you know what, it's not going to go any more further higher anymore. It's reached this maximum point, so they're going to start selling it, and that's when it goes down, right? So that's the point when sellers will feel that, okay, it's reached this maximum point, I'm going to sell, price then takes a dip. Now, these are the two things that continuously drives the market, and in history, throughout history, it repeats itself. Now, because of that, on the charts, what do we actually get on the charts because of this? We do not get a straight line happening. Right? If you get a straight line happening, then there's no maximum point ever reached, isn't it? The sellers that's always thinking that the buyers always think that it's always going to go higher, and the sellers basically never think that it's reached a max, and the buyers will not feeling that, you know what, it's not worth any more higher than that if it always was in a straight line. Now, because this thing continuously happens throughout time, that's why we get ups and downs. We get cycles, don't we? And that's what is plastered throughout the whole of the charts when you put it together. So that is a recurring principle that keeps repeating itself, not only in the past but towards the future, because of an impediment psychological behavior within humans, right? Which is of fear and greed, which then drives the market up and down, creating the cyclical pattern and creating the tops and bottoms. Now, that's the first point. However, on another basis, traders, in terms of towards the future, in terms of technical analysis repeating itself, is not necessarily true all the time. So, in terms of technical analysis and your backtesting reproducing itself in the future, not all the time. Okay, let me explain now. How do you make it more so that it can reproduce itself towards the future? The first of all you do need is the parameters that you have designed in your system to cover for future price permutations. Okay, and that's what most traders would not have. And that's why, even though whatever strategy that they have designed based on technical analysis based on the past, sometimes the backtesting results don't reproduce itself in the future. Okay, now, even though the market may still continue to make its cycles, however, still your strategies may not continue to make money if they are not capturing the swing moves. Now, why would that be? The reason is that even though history is repeating itself, but your strategy based on its backtesting results is not able to reproduce its results for the future is because of the parameters that you have which are not helping towards sustainability of your results in the past reproducing itself for the future. And what are the parameters that you do need for that? One, mainly, which what we use is you need your exit points. Okay, your exit points which are adaptable in the market based from research from the past but are still adaptable towards the future. Okay, that you do need to cover for future price permutations and price shocks. A large part of this can be helped with open equity research, which is what we've talked about in our previous videos. The second thing is that just don't choose the results, your backtesting results, with the highest return. Don't choose them. Don't choose them with the highest return. Now, that's a mistake that most common traders make. Choose the one, even if it's giving you a mid return, but with the highest sustainability for the future, which is what I talked about. Yeah. The final thing that you do need so that you can cover for the future as well is very importantly your money management. Okay, money management is three parts. You can either scale in, you can either scale out, or you can also, the most important part is your risk management too, so that your drawdowns are kept very low. Now, all these factors together, which is your parameters for sustainability for the future, not only just based on history repeating itself, but also including all these parameters to account for future price permutations and shocks, will help improve your results for the future too, and for sustainability, scalability, and reproducibility of your strategy. The three parameters you need to look out for is your exit points based on open equity data. The second one, which is based on your backtesting results, but just don't choose the one with the highest return, but based on a sustainable basis of logic. And the third one, which is very important, which is your money management, which is based on scaling in, scaling out, and importantly, your risk management based on all your drawdown data. So quite a bit of work that you need to do to ensure that your results from the past can sustain itself for the future, including parameters to help account for future scenarios as well. Okay, I guess that makes it a bit more clear. So a lot to digest. So do reflect on all of that. Now let's go through the markets today. Dollar Swiss dollar is still on the uprise, still an uptrend over here. We did take this on a cash-in based strategy over here. Over here on terms of dollar yen, dollar still rising a bit more further up. If it continues on with this strength today, highly probably we will get a confirmation bar setting in today on the dollar yen. In terms of cable, taking a bit of a dip since the dollar is strengthening, it is correlating, but yet again still looking for this low to be taken out. Second low to be taken out is here. Okay, at that point then we will see that we got some strength to the downside. Those are the two levels I will be looking at. Now moving on to euro dollar. Over here on a downtrend basis, over here you can still see it's moving further down. Cash in enters on the confirmation bar, riding the move at the moment. So let's see this more downward move over here. This is what I mean. I mean, thinking about how to sustain your strategy for the future. Money management is very important. That's why we take 1/3 of a position out so that our risk drawdowns are maintained. And the next part is through price bar projections in how we protect ourselves for future price shocks and price projections. Aussie dollar continuous further down over here, 4 bars consecutively down. This might give you a high confirmation, highly probably if it keeps at its level for today. Okay, so we'll see how that carries on for today. Euro yen, yes, on its real consecutive drop down over here is what we are having. We did enter on this bar on cash in. Amazing strategy for you guys to get involved on it. Those of you thinking of how to take advantage of the market opportunities at the moment, we have taken already 1/3 position out, 2/3 are still running. Really very great. This is why I keep telling everyone is that the time is the thing that you guys don't have. Right now the markets are really moving very well, so get onto it. Okay, don't delay. Right. Bitcoin, on the other hand, you can see it's an uptrend at the moment over here. Confirmation over here. Open equity, still a little bit more left. Up is what we have at the moment. Oil has dropped to $27. It went down all the way to 18, taking a bit of a bounce at the moment. A little bit more open equity to the upside, but be careful. The trend is still to the downside. If you do want to ride this move, of course, have your risk management, money management in place. As I've always said, three things you always need to know when you before you take a position: your entry point, your exact trade management once you get in, and finally your exit point too. Okay, trade management is very, very important, which most people do not have or do not even know about. Very strange, isn't it? Now, the final thing is we're looking at gold at the moment. Down as well, confirmation dot over here, still a little bit more to the downside, I would say, is what we would have. So let's take a look at that as well. FTSE down as well, confirmation, a little bit more open equity to the downside, definitely down. Let's see if it hasn't confirmed yet a high. I would still say maybe highly probably, looking at how it's stalling. Few levels to look at for it to carry on further down. This level here, 20,000, and the other level here over here. Let's see which one it breaks out of to see if it gives the strength to further move upwards. S&P on the daily, still recovering very slowly. Doesn't look like it. Massive to the downside. Logo confirmed very recently, again boxing up over here. Let's see which level it takes out and where the open equity lies. If it does take out this level and does confirm to the downside, yes, a little bit more move to the downside. If it does take out this, we will have a little bit more move to the upside, and at that point we will see how it carries on forward. Okay, soya beans, we are on it as well. On the futures, over here we did take it on the confirmation, got 1/3 of the position out already. I would say still more, a little bit more downside over here is what we would have. Finally, wheat. What do we have? Still again confirmation dot. We had one more bar consecutive to it. We did take out 1/3. Right now, a bit of retracement here. I would still say a little bit more open equity to the downside over here too. If it does revert, then we will have our positions reversing too as well. Okay, good. So I think that's pretty much that from me on the market update. How did we perform on our strategies, including cash in as well? On the elite room, we have looked at the first interruptions in gold bar system and all that, what we have come out of. In terms of gold bars, we have minus 0.84%, minus 1% on the IB, and then finally minus 2.44 on the prime profit. Okay, is what we got. So altogether, over here we have minus 4.28% in terms of first interruptions. Okay. Now, what I want you to understand is we will still, of course, we will still carry on with this strategy. You know, the reason is because each of these strategies, they got about at least about 5-to-1 reward to risk ratio. So even if one wins, this will come out of its negative drawdown immediately. And we also continuously measure our drawdowns to see whether we have hit maximum drawdown or not. As of now, not yet. Now, the final thing is, in the live trading room, right? Live trading room, what did we get as well? Because we've got two rooms that we run. In terms of the live trading room, let's take a look at that over here. Let me bring it here. Okay, there you go. So we have the cash in strategy 2 on the lift off strategy over here. Let's see over here, lift off system over here, what we got on lift off. We have 0.70% up is what we got. And in terms of GB Live, we have minus 0.92, and then CI 4.0. Now, Cash-in 4.0 we recently released. It's still in its preliminary stages, but showing very good results, which is highly probably going to be on system very soon. You can see so many trades that we are placing all on 3 positions, 1% split into 3. You can start to see that we are taking it all across every market: cable, dollar, yen. You can see soya beans, wheat, oil, DAX. This is really good. So I would definitely tell you guys to get involved in this. At now, because it's in beta, so we are only putting it at 1% and split into 3 positions. At the moment, what do we have on cash in? We got 1.25% up. But that's only all those positions which are closed. We still got ones which are running, which are not closed yet. Okay. So in terms of all of that, when you add it all up, 0.70 minus 0.92 and 1.25, we got the live trading room at 1.03% up at the moment. So when we look at the elite room, which is minus 4.28, and the live trading room, which is up 1.03%, total we're getting about minus 3.25%. Okay, so when we get out of this drawdowns and realize all our positions, be sure that this will come into a positive equity point. Okay, some weeks are going to be like that, but the reason what gives you the conviction is your recurring logic, as I've explained earlier in this video as well, and many other videos on how you build strong, robust strategies that also match for sustainable, scalable, reproducible returns. Okay, all right, I guess that's pretty much that from me on this market update. Do reflect on all the things I've said over here, and also keep a log on your trade performance too. It's very critical. That's all for me for now, and as we always say, till next time, stay disciplined, follow your trading plan, and keep trading like a master.